Key concepts. Source documents. Accounting cycle. Cash receipts journal. Cash payments journal. Purchases journal. Purchases returns journal. Sales journal. Sales returns journal. General journal. Output, VAT. Zapper payments. E-wallet payments. Electronic funds transfer. General ledger. Trade receivables ledger. Trade payables ledger. Comprehensive taxation. Vendor. Taxable supplies. Exempted supplies. Settlement discount granted. Settlement discount received. Value-added tax, VAT. Input, VAT. Snapscan payments. CashPay payments. 5.1 Introduction. In the previous study units, you learned how to analyze transactions and to determine their effect on the basic accounting equation. You were then shown how to record all the transactions in the accounts in the general ledger. We explained the principles of the double entry system and emphasized the importance of that system. This created a framework for studying the processing of accounting data in greater detail, which is what we are going to do next. 5.2 The accounting cycle. Accounting data are processed within a definite framework, which is known as the accounting cycle. The following diagram shows the accounting cycle. Books of first entry, journals. Because a large number of transactions take place in an entity, recording each transaction directly in the ledger will make the ledger very bulky and unmanageable, and, in a manual system, only one person can write up the books. For this reason, transactions of the same type are grouped together and analyzed in subsidiary journals or books of first entry before they are recorded in summarized form in the ledger. A journal is thus a link between source documents and the ledger. No transaction may be recorded in the ledger before it has been recorded in a journal, and no transaction may be recorded in a journal without the necessary source document as proof that a transaction actually took place. 5.4 Types of journals. There are various types of journals or books of first entry. For the time being, we will concentrate on the cash receipts journal and the cash payments journal, in which all cash transactions are recorded. The purchases journal and the purchases returns journal, in which all credit purchases and returns of credit purchases are recorded. The sales journal and the sales returns journal, in which all credit sales and returns of credit sales are recorded. The general journal, in which transactions are recorded that are not recorded in one of the other journals, for example, the correction of errors and the writing off of credit losses, bad debts, are recorded. 5.5 Cash journals. 5.5.1 Cash receipts journal. All monies received that are deposited in the entity's bank account are recorded in the cash receipts journal. At the end of the month, only one amount, which represents the entire month's cash receipts, is debited to the bank account. The other column totals represent the contra accounts and are credited to such accounts. The amounts in a sundry accounts column are credited individually to the relevant accounts. Let us now go back to the information we had for Fix and Mat in Study Unit 4, Sections 4.4 and 4.5. Fix and Mat's cash receipts journal and ledger accounts will look as follows. FIX and Mat cash receipts journal, February 20.1 CRJ1. Comments. Source documents for entries in the cash receipts journal are the cash register roll, the bank statement, duplicate receipts, duplicate cash invoices, and duplicate deposit slips. The cash, EFT, cash, credit card, debit card, or Zapper receipts for the month are recorded and analyzed in date order. Each cash amount received in the course of a day is not banked immediately. Cash receipts are first recorded in the analysis of receipts column, and the amount that is banked for that day is recorded in the bank column. Any direct payment into the bank account of the entity will not be entered into the analysis of receipts column, but will be entered directly into the bank column. Electronic funds transfers are deposited directly into the bank account and will be entered every day in the books of the entity from the bank statement of the entity. These amounts will be entered directly in the bank column. The addition in the columns must be checked by cross-casting. In other words, when the totals of the analysis columns are added, they must equal the total in the bank column. Entries in the sundry accounts column are posted individually to the general ledger. Only the totals of the other columns are posted. The cash receipts journal is a book of first entry. The double entry system has to be applied in the general ledger. The amounts are not recorded individually again in the bank account in the general ledger. Note that the credit entries in the accounts add up to our 158,000, which corresponds to the debit entry in the bank account. The number and headings of columns in the journal will depend on the frequency of occurrence of transactions and can differ from one entity to another. Generally, transactions that occur more frequently will have dedicated columns. 5.5.2 Cash Payments Journal. All cash payments, that is, payments made by way of check, no longer accepted by most banks, EFT, credit card, debit card, cash, e-wallet, Snapscan, CashPay, and Zapper are recorded in the Cash Payments Journal. At the end of the month, only one amount, which represents the entire month's cash payments, is credited to the bank account. The other column totals represent the contra accounts and are debited to such accounts. The amounts in the sundry accounts column are debited individually to the relevant accounts. FAC1502's cash payments journal and ledger accounts will look as follows. FAC1502 cash payments journal, February 20.1 CPJ1. Comments. Source documents for entries in the Cash Payments Journal are check counterfoils. Checks are no longer accepted by most of the commercial banks, debit notes, and credit card slips, together with original cash invoices or the bank statement issued by the bank. EFT transactions will be numbered in the bank statement according to payment request numbers, P for payment and number. The original cash invoices will be attached to the payment requests. Entries are recorded and analyzed in the Cash Payments Journal in the same order as the payment request numbers. The amount that appears on the payment request is the amount that is recorded in the bank column. The addition in the columns must be checked by cross-casting to ensure it is correct. In other words, when the totals of the analysis columns are added, they must equal the total of the bank column. Entries in the sundry accounts column are posted individually to the general ledger. Only the totals of the other columns are posted. The amounts are not recorded individually again in the bank account in the general ledger. The Cash Payments Journal is a book of first entry. The double entry system has to be applied in the general ledger. More analysis columns can be included as required by the entity. Ms. Beauty Beloy opens a hairdressing salon, Beauty's Hair, on 1 June 20.3 and enters into the following transactions in June 20.3. June 1st, Ms. Beauty Beloy deposited our 10,000 directly into the business's bank account. Made an EFT to Hortru to pay the month's rental of our 1000. Made an EFT to pay the water and electricity deposit of our 500. 2 bought our 2 500s worth of equipment and our 845s worth of consumable inventory from head suppliers and paid the amount of our 345 with the credit card of the business. 5 money for services rendered paid directly into the bank account of Beauty's Hair, our 350. 7 Ms. Beauty Beloy withdrew cash from the business account at an ATM to pay her assistant's wages of our 200. 10 Cash register roll total for services rendered, our 556. The money was deposited into the bank account of the business. Ms. Beauty Beloy withdrew our 500 cash from the business account at an ATM to pay the week's wages of our 200, the remainder being for Ms. Beloy's own use. Cash register roll total for services rendered, our 642. The money was deposited into the bank account of the business. 17 Bought stationery from office suppliers, our 80, and paid with the credit card of the business. 19 Cash register roll total for services rendered, our 438. The money was deposited into the bank account of the business. Made an e-wallet payment to pay the week's wages, our 200. Bought shampoo and other accessories from head suppliers and made a direct payment into their bank account for the amount of our 550. Cash register roll total for services rendered, our 387. The money was deposited into the bank account of the business. Made a direct payment to Telcom to pay the telephone account, our 260, which included installation costs of our 180. 28 Ms. Beauty Beloy withdrew our 1,500 cash from the business account at an ATM. Our 1,300 was for Ms. Beloy's own use, and our 200 was for the week's wages. 30 Cash register roll total for services rendered, our 875. The money was deposited into the bank account of the business. Required. Prepare the cash receipts journal for Beauty's Hair for June 20.3. Prepare the cash payments journal for Beauty's Hair for June 20.3. Show the postings from these journals to the general ledger accounts. Prepare the trial balance as at 30 June 20.3. Comments. The B numbers indicate the accounts that will be balanced and shown in the statement of financial position, and the N numbers indicate the nominal accounts that will be posted and closed off to the profit or loss account, statement of profit or loss, and other comprehensive income. Nominal accounts are income and expenditure accounts, while statement of financial position accounts are capital, asset, and liability accounts. In the folio column in the general ledger, the cash receipts or cash payments journal is given as a reference, but in the details column the names of the contra ledger accounts, other accounts involved in the transaction, are entered. The summarizing effect of the subsidiary journals can be clearly seen in the general ledger. Note the entries in the bank account and the services rendered account. An e-wallet payment is a payment that is made to a person who does not have a bank account. The cell phone number of that person, the recipient, becomes their account number. The recipient can draw the money at an ATM using their ID number as well as the verification number sent by the person who made the payment. 5.6 Credit journals and the general journal. 5.6.1 Introduction. In many business entities, goods are bought and sold on credit. In the process, accounts have to be opened for debtors and creditors individually. If all these accounts are included in the general ledger, the same sort of problem arises that we have already mentioned. The general ledger becomes too bulky and unmanageable, and, in a manual system, only one person can write up the books. For this reason, a trade receivables ledger and a trade payables ledger are opened in which the individual debtors' accounts and creditors' accounts are kept. A single account is then held in the general ledger for debtors, namely, a trade receivables control account, and one account is held for creditors, namely, a trade payables control account. This means that the entire accounting system is adapted to make provision for the control accounts. In the cash receipts journal and the cash payments journal, provision is made for additional columns for trade receivables control and trade payables control. You can learn more about trade receivables control in Study Unit 9 and trade payables control in Study Unit 13. 5.6.2 Inventory Systems. We distinguish between the periodic inventory system and the perpetual inventory system, which will be dealt with in detail in Study Unit 7. At this stage, all you need to know is that trading inventory, merchandise, that is purchased has to be debited to a purchases account if the periodic inventory system is used. Provision must therefore be made for a purchases column in the subsidiary journal. If the perpetual inventory system is used, trading inventory, merchandise, is debited to an inventory account, and an inventory column is required instead of a purchases column in the subsidiary journal. 5.6.3 Purchases Journal and Purchases Returns Journal. Merchandise purchased on credit is recorded in the Purchases Journal. At the end of the month, only the total of the credit purchases for the month is debited to the purchases account and credited to the trade payables control account. If some of the goods are returned, they are recorded in the Purchases Returns Journal. Because entities have a large number of creditors, a separate subsidiary ledger, called the Trade Payables Ledger, is kept in which all the individual creditors are entered. NB. For the purpose of this module, only merchandise purchased on credit is recorded in the Purchases Journal. All other credit purchases are recorded in the General Journal. A trade discount is often granted by wholesalers to retailers. The discount percentage that is agreed upon is calculated and deducted on the cash or credit invoice. The net amount on the invoice is recorded as the amount of purchases in the accounting records of the purchaser. Thus, the trade discount amount is never recorded in the accounting records of the purchaser. To encourage a debtor to pay his/her account within a certain period, a discount option is given to the debtor. If the account is settled within the stipulated period, the discount will be recorded in the settlement discount granted account in the seller's accounting records and the settlement discount received account in the buyer's accounting records. The full amount of the invoice must be paid if the account is not settled within the stipulated period. A purchases journal and purchases returns journal have the following formats. ABC Dealers Purchases Journal, May 20.3 PJ5. Invoice number. Date. Details. Fall. Purchases. Trade payables control. Comments. The source documents for entries in the Purchases Journal are original invoices. Because these invoices come from different businesses, they are renumbered consecutively. The source documents for entries in the Purchases Returns Journal are the original credit notes received from the creditors, and they must be renumbered consecutively. Entries are recorded and analyzed in date order in the Purchases Journal and the Purchases Returns Journal. A creditor's name and the amount for which purchases or returns were made must be clearly shown. Only the totals of the columns are posted to the general ledger. The amounts in the purchases and the trade payables control columns are the same in the Purchases Journal because we are still ignoring VAT. The same goes for the Purchases Returns Journal. The creditor's accounts are credited individually in the trade payables ledger with purchases and debited with returns. A 3-column ledger is preferable to the traditional T account format because the balance can be calculated after each transaction. The total of all the balances of the individual creditor's accounts must correspond with the balance of the trade payables control account. The Purchases Journal and the Purchases Returns Journal are books of first entry. The double entry procedure has to be applied in the general ledger. 5.6.4 Sales Journal and Sales Returns Journal. Merchandise sold on credit is recorded in the sales journal. At the end of the month, only the total credit sales for the month are credited to the sales account and debited to the trade receivables control account. If the debtors return some of the goods, they are recorded in the Sales Returns Journal. Because entities have a large number of debtors, a separate subsidiary ledger, called the Trade Receivables Ledger, is kept in which all the individual debtors are entered. NB. For the purposes of this module, only merchandise sold on credit is recorded in the Sales Journal. All other credit sales are recorded in the General Journal. A Sales Journal and a Sales Returns Journal have the following formats. ABC Dealers Sales Journal, May 20.3 SJ5. Invoice number. Date. Details. Fall. Sales. Trade Receivables Control. Comments. The source documents for entries in the Sales Journal are the duplicates of sales invoices. The source documents for entries in the Sales Returns Journal are the duplicates of credit notes issued to the debtors. A debtor's name and the amount of the transaction should be clearly indicated. Entries are recorded and analyzed in date order in the Sales Journal and the Sales Returns Journal. Only the totals of the columns are posted to the general ledger. The amounts in the sales and the trade receivables control columns are the same in the Sales Journal and the Sales Returns Journal because we are still ignoring VAT. The effect of VAT will be explained later. The same goes for the Sales Returns Journal. The debtors' accounts are debited individually in the trade receivables ledger with sales and credited with sales returns. The total of all the balances of the individual debtors' accounts must correspond with the balance of the trade receivables control account. The Sales Journal and the Sales Returns Journal are books of first entry. They provide a summary of sales and returns. The double entry system has to be applied in the general ledger. 5.6.5 General Journal. All transactions that cannot be entered in one of the journals we have discussed are entered in the General Journal. Examples are credit losses, bad debts that are written off, interest on debtors' accounts, errors that are corrected, and year-end adjustments, which will be discussed in Study Unit 6. NB. Purchases and sales of goods, other than merchandise, are recorded in the General Journal for the purposes of this module. A general journal takes the following form. ABC Dealers General Journal, May 20.3 GJ5. Comments. The account that is entered first is the account that has to be debited in the general ledger. The narration is very important since it gives the reason for the entry. It must also refer to source documents. The General Journal is a book of first entry. The double entry system has to be applied in the general ledger. The General Journal can have additional columns that make provision for trade receivables control debit and credit columns as well as trade payables control debit and credit columns. The totals of these columns will be posted to either the Trade Receivables Control account or the Trade Payables Control account as journal debits or journal credits. Theoretically, all transactions can be recorded in the general journal. 5.7 The trial balance. For each transaction, the debit entry must equal the credit entry. The total of all the debit balances should, therefore, correspond to the total of all the credit balances. A list of balances is prepared periodically to determine whether any errors have been made. This list of balances is called a trial balance. 5.8 Revision Exercise and Solution. On 1 March 20.5, Apple opened a supermarket under the trade name AA Supermarket. He decided to use the periodic inventory system and entered into the following transactions in March 20.5. 20.5. March 1st, Apple deposited R50,000 directly into the bank account of the entity as a capital contribution. Made an EFT to JHB letting agents to pay the rent of R2000. Bought shop equipment from Equip on credit, R10000, and paid R1000 by credit card as a deposit. Made a direct payment to the municipality to pay the water and electricity deposit, R1000. Purchased merchandise on credit from TR wholesalers, R23,541. Purchased packing material from S suppliers and paid by credit card, R468. Drew cash at an ATM from the account of the entity, R500. The amount will be used as cash float. Cash sales per cash register roll on opening day, R18,674. Purchased merchandise on credit from the following wholesalers. BB dealers, R7832. DBN distributors, R6965. Sublet a storeroom to G Gold, who paid an amount of R250 directly into the bank account of AA Supermarket. Cash sales per cash register roll, R12,455. 10 e-wallet payments were made to pay wages, R1200. Issued invoices to the following people for goods sold on credit. B Blue, R478, S Silver, R693. Made an EFT of R5378 to Z Zulu for merchandise purchased. Purchased a computer from HIQ, R5260. Paid R1478 by credit card, which included a deposit of R1000 and R478 for paper and computer supplies. Sold goods on credit to the following people. G Gree, R324. R Red, R299. Cash sales per cash register roll, R8790. 20.5. March 17th, drew money at an ATM for the following. Wages, R1500. Owner's own use, R1000. B Blue made a payment of R200 directly into the bank account of AA Supermarket. Made an EFT of R2675 to TR wholesalers for merchandise purchased. Merchandise sold for cash as per cash register roll, R12570. Goods sold on credit. B Blue, R362, R Red, R178. S Silver paid R100 cash on his account. Cash sales as per cash register roll, R10238. Made an EFT of R550 to the newsmaker for the placement of advertisements. Drew cash to pay wages, R1500. Purchased stationery on credit from HIQ, R267. Issued a receipt to R Red for R299 in part payment of his account. 27 Made EFTs to the following entities in part settlement of their accounts. TR wholesalers, R20000. BB dealers, R6000. DBN distributors are 5,000, HIQ are 1,000. Credit sales to S Silver are 262. He paid R200 on his account. Cash sales as per cash register roll are 16,742. Made EFTs for the following. L. Lemon, salary of the manager are 2,500. Equip on account are 1,000. JHB letting agents for April's rental are 2,000. Made a direct payment to Telcom to pay the telephone account are 595. Cash sales as per cash register roll are 15,284. Issued receipts to the following debtors for money received on their accounts. G. Green are 324. B. Blue are 640. Drew are 3,000. Cash at the ATM to pay wages are 1,500, and the balance was for the owner's own use. Required. Prepare the subsidiary journals of AA Supermarket for March 20.5. The general, trade receivables, and trade payables ledgers of AA Supermarket for March 20.5. The trial balance of AA Supermarket as at 31 March 20.5. Ignore VAT. Solution, revision exercise. 1. Subsidiary journals. AA Supermarket Cash Receipts Journal, March 20.5 CRJ1. Golden Rule. The total of all the balances of the individual debtors' accounts in the subsidiary trade receivables ledger must equal the balance of the trade receivables control account in the general ledger. Golden Rule. The total of the balances of the individual creditors' accounts in the subsidiary trade payables ledger must equal the balance of the trade payables control account in the general ledger. Settlement discount. 5.9.1 Settlement discount granted. A discount is often offered to debtors in order to encourage quick settlement of their debts within the stated credit term. The credit term will be shown on the credit invoice, for example, 30 days from the date of sale. 5.9.2 Settlement discount received. A discount is often received from creditors in order to encourage quick settlement of entities' outstanding accounts. 5.10 Value-added tax, VAT. 5.10.1 Background. VAT is levied at every point in the chain of production and distribution of goods and services. VAT is based on a tax credit system that allows every producer or distributor along the chain to recover the VAT that was previously paid by the business. The tax borne by each producer or distributor through whose hands the goods or services pass before reaching the end user is, in effect, the tax on the value added by the business. The tax that must eventually, every 2 months for most entities, be paid to the South African Revenue Service, SARS, is the tax on the supply of goods, sales, and/or services rendered by the entity, output VAT, less the tax paid by the entity on the goods, purchases, and/or services supplied to the entity, input VAT. Golden Rules. Output VAT is the tax levied, charged, by the entity on sales of goods or services rendered by the business. Input VAT is the tax paid, or payable, on goods delivered and/or services rendered to the entity, including imports. Deductions for input tax will only be allowed if a proper tax invoice is received and kept. Output VAT minus input VAT equals amount payable/refundable, that is, the amount that is payable to SARS or the amount that can be claimed from SARS. VAT can only be charged by persons who, in terms of the Value-Added Tax Act, are registered as VAT vendors. Registration is compulsory if a person carries on as an entity and the total value of the entity's supplies for a 12-month period exceeds or is likely to exceed a stipulated, in the Act, amount. An entity may also register voluntarily if the total value of its sales or services rendered is below the stipulated amount. The stipulated amount excludes tax, exempted supplies, and abnormal receipts. Some products are zero-rated supplies, which will be indicated in transactions. An input tax, 15%, can be claimed on these products, but no output tax because the products are zero-rated, 0%, that means no tax can be levied on the final products for human consumption. The following goods and services are zero-rated. Exports. 19 basic food items. Illuminating paraffin. Goods that are subject to the fuel levy, petrol and diesel. International transport services. Farming inputs. Sales of going concerns. Certain grants offered by government. Since changes can occur in the list of zero-rated supplies, you are advised to go to www.sars.gov.za. The following basic foodstuffs are zero-rated in South Africa. Dried beans. Samp. Maize meal. Rice. Brown bread. Vegetables. Fruits. Vegetable oil. Malai rice. Pilchards in tins. Edible legumes and pulses of leguminous plants. Eggs. Milk. Dried mealies. Dairy powder blend. Lentils. Cultured milk. Milk powder. Brown wheaten meal. Sanitary pads. Bread flour. Cake flour. Financial services, especially interest received and interest paid, and educational services, provided by the state are exempt from VAT. This means that neither input tax nor output tax can be claimed on these services. Goods and services exempted from VAT are non-free-related financial services. Educational services provided by an approved educational institution. Residential rental accommodation. Public road and rail transport. If an entity is not registered as a VAT vendor, no output tax may be charged and no deduction for input tax can be claimed. The onus is on the entity to register, where necessary, and this must be done within 21 days of becoming liable to register. Salaries and wages are subjected to income tax such as pay as you earn, PAYE, and not VAT. 5.10.2 Tax period. A tax period is allocated to every entity. The return submitted by an entity must cover the period allocated to it. Some entities registered for VAT, vendors, must submit their returns every 2 months for those 2 months. Some entities must complete and submit their returns for unequal months, that is, January, March, May, and so on, and others must submit theirs for equal months, that is, February, April, and so on. 5.10.3 Accounting bases. There are only 2 bases for the calculation of a VAT liability, namely the invoice basis. The payments basis. On the invoice basis, tax is accounted for upon the issue of an invoice or the receipt of payment, whichever comes first. On the payments basis, tax is accounted for when payments are made, purchases, and payments are received, sales. Certain requirements have to be met before a vendor may use the payments basis. To grasp the principles of VAT, work through the following exercise thoroughly. VAT at 15% is applicable. The following information relates to Runda Dealers, who is registered as a VAT vendor and who uses the periodic inventory system. The VAT period of the business ends on unequal months. Transactions for March 20.4. March 1st, cash sales are 15,640. 5 paid the account of T Tiger by direct payment after deducting AR 115 discount. 7 received a direct payment from W Wolf for R 1468 in full settlement of his account. Received a direct payment from L Lion for R 701 and granted AR 69 discount. Received an account from Stationers Ltd for the printing of documents R 690. Credit sales. L Lion R 2300. W Wolf R 1150. Sold an old computer to O Old for R 299 and received his direct payment for the amount due. Cash sales R 6900. 21 issued a credit note to L Lion for an overcharge on the invoice of the 13th R 69. 23 paid C Cheetah by a direct payment for Courage on goods purchased R 1150. Received a credit invoice from T Tiger for goods purchased R 14720. Made direct payments for salaries and wages R 5746 and for purchases from BBAM R 8050. Issued a debit note to T Tiger for goods returned to him R 805. Required. Record the above transactions in the following subsidiary journals, properly totaled, of Runda Dealers for March 20.4. Cash Receipts Journal, Analysis Columns for Bank, Sales, VAT Output, Trade Receivables Control, VAT Input, DR, Settlement Discount Granted and Sundries. Cash Payments Journal, Analysis Columns for Bank Purchases, Trade Payables Control, Settlement Discount Received, VAT Input, VAT Output, CR, and Sundries. Sales Journal, Analysis Columns for VAT Output, Sales, and Trade Receivables Control. Purchases Journal, Analysis Columns for VAT Input, Purchases, and Trade Payables Control. Sales Returns Journal, Analysis Columns for VAT Output, Sale Returns, and Trade Receivables Control. Purchases Returns Journal, Analysis Columns for VAT Input, Purchases Returns, and Trade Payables Control, G, General Journal. Post the entries recorded above to the VAT Input and VAT Output accounts. Close off these accounts to the VAT Control account. Balance the VAT Control account at 31 March 20.4, the end of the business's VAT period. 1. Subsidiary Journals.
A.
Runda Dealers Cash Receipts Journal, March 20.4 CRJ2. Discount includes 15% VAT, therefore. R115/1x15/115 equals R15. The VAT output has already been calculated on the sales amount and paid over to SARS, but now the full amount of the sales will not be paid because the business granted a discount. The business can therefore claim the amount of VAT paid on the discount back as VAT input. Hashtag VAT input is debited. The VAT input has already been calculated on the purchases amount and claimed from SARS, but now the full amount of the purchases will not be paid because the business received a discount. The business must therefore pay the amount of VAT claimed on the discount received over as VAT output. Amounts. The calculation of VAT on all amounts that include 15% VAT is as follows. Percent or R. Amount without VAT equals 101.00. That equals 15. Amount VAT inclusive equals 115.115. The calculation of an amount if VAT was included is as follows. 15/115x amount given. Example, amount received on 1 March 20.4 equals R 15,640, including VAT, see Cash Receipts Journal. The calculations are as follows. VAT equals 15/115x R 15,640 equals R 2040. Sales equals 100/115x R 15,640 equals R 13,600 or. Sales equals R 15,640 divided by R 15 equals R 13,600. VAT on cash sales is credited to the VAT output account because run to dealers received VAT for payment to the South African Revenue Service. VAT on credit sales is credited to the VAT output account. VAT on cash purchases is debited to the VAT input account. VAT on credit purchases is debited to the VAT input account. VAT on sales returns is debited to the VAT output account. To cancel the VAT output portion of the sales returned. VAT on purchases returns is credited to the VAT input account. To cancel the input portion of the purchases returned. VAT on settlement discounts to debtors is debited to the VAT input account, to reduce the amount owed to the South African Revenue Service. VAT on settlement discounts received from creditors is credited to the VAT output account, to increase the amount owed to the South African Revenue Service. The balances of the VAT input and VAT output accounts are transferred to the VAT control account to determine what amount must be paid to or claimed from the South African Revenue Service. When the difference between the debit and credit sides of the VAT control is a credit, the difference is payable to the South African Revenue Service, current liability. Debit, the difference is refundable by the South African Revenue Service, current asset. NB, VAT is charged on services, for example, the provision of telephone services, water and electricity, and repairs. 5.11 Revision Exercise and Solution. Please attempt 5.11 revision exercise under the heading Content. The answer will be provided at a later stage. Self-assessment. Now that you have studied this study unit, can you prepare the following journals, taking value-added tax into account? Cash Receipts Journal, Cash Payments Journal, Purchases Journal. Purchases returns journal. Sales journal. Sales returns journal. General journal. Post to the following ledgers. General ledger. Trade receivables ledger. Trade payables ledger. Prepare a trial balance. Balance.